Picture this. It's 1974. The world is reeling from a crisis, and deep in the Saudi desert, a secret deal is struck. A handshake that will supposedly guarantee America's global dominance for the next 50 years. And that deal, we're told, just expired. For decades, this simple story has defined our understanding of American power. The U.S. offers military protection to Saudi Arabia. In exchange, the kingdom agrees to sell its oil only in U.S. dollars. This was the birth of the petrodollar, the supposed bedrock of America's entire financial empire. So, when headlines in June of 2024 declared the end of an era, that this 50-year pact had lapsed and wouldn't be renewed, the message seemed obvious. The foundation of American economic might has just crumbled, paving the way for a new world order. But here's the thing. The story you've been told is a lie. That 50-year deal? It never existed. Its expiration is a ghost story. The truth is far more complex, way more interesting, and it reveals the real reasons the world is finally, slowly, starting to turn its back on the dollar. So, let's debunk what really happened in 1974, uncover the true pillars of America's economic superpower status, and explain why a 50-year-old lie suddenly feels so true today. Section 1. The World on Fire. The Birth of a Myth. To get the lie, you first have to get the world that created it. We need to go back to the early 1970s, a time of absolute crisis for the United States. For almost 30 years since World War II, the global financial system had been built on one powerful promise. Under the Bretton Woods Agreement, the world's major currencies were pegged to the U.S. dollar, and the dollar, in turn, was pegged to gold at $35 an ounce. Any country could, in theory, show up at the U.S. Treasury and swap their dollars for physical gold. It made the dollar as good as gold, and America the trusted banker of the world. But by the late 60s, that promise was getting harder and harder to keep. The U.S. was printing money like crazy to fund the Vietnam War and massive social programs at home. The number of dollars floating around the world ballooned, far exceeding the gold sitting in U.S. vaults. Other countries, especially in Europe, started to get nervous. They began trading in their dollars for gold, and America's reserves started to drain at an alarming rate. The breaking point came on August 15, 1971. In a move that sent shockwaves across the globe, President Richard Nixon went on TV and unilaterally severed the link between the dollar and gold. Poof! Just like that. The Nixon shock didn't just rattle the system, it blew it up. Suddenly, the U.S. dollar was backed by nothing but the full faith and credit of the U.S. government, a fiat currency. For the first time in a generation, the world was left wondering, what exactly is a dollar worth? And if that wasn't enough, another crisis was brewing. In October 1973, Arab members of OPEC, led by Saudi Arabia, declared an oil embargo against the U.S. and its allies for supporting Israel during the Yom Kippur War. They didn't just halt oil sales, they quadrupled the price, from about $3 a barrel to nearly $12. The effect was devastating. Gas lines snaked for miles, economies crashed, and a new word entered the dictionary: petrodollars. These were the billions of U.S. dollars now flooding into the accounts of oil-producing nations. It was the perfect storm. You had a U.S. currency in crisis, unmoored from gold and desperate for a new source of global demand. And on the other side of the world, a handful of desert kingdoms were suddenly drowning in those same dollars, needing both security and a place to park their unimaginable new wealth. The stage was set for a grand bargain. The simple story, oil for dollars, protection for allegiance, was so neat, so logical, it just had to be true. Now, fast forward to June 9, 2024. The internet explodes with reports that the 50-year Petrodollar Agreement is officially over, and Saudi Arabia has walked away. The narrative claims a formal, binding treaty that forced the Saudis to sell oil exclusively in dollars was now void. The implication? The kingdom is free to sell its oil in Chinese yuan or anything else, landing a fatal blow to the dollar. The only problem? When you actually go looking for this 50-year treaty, you find nothing. It's not there. It doesn't exist. There is no historical record of a 50-year Petrodollar Agreement signed in 1974. So what really happened? What was signed on June 8, 1974, was the United States-Saudi Arabian Joint Commission on Economic Cooperation. And thanks to public records, we know exactly what was in it. It was a framework for the U.S. to provide technical help to Saudi Arabia, assisting them in using their new oil money to build out their infrastructure. If you read the agreement, you won't find the words oil, exclusive, or petrodollar. And most importantly, you won't find a 50-year expiration date. The commission was set up for just 5 years, with options to extend or cancel. The story that this 1974 commission created an exclusive dollar for oil mandate is just flat out wrong. In fact, records show that Saudi Arabia was still accepting British pounds for some oil sales after the agreement was signed, only phasing the practice out later as a market-based decision. The viral story of the deal's expiration, as one chief economist bluntly put it, is fake news. But that doesn't mean nothing happened. There was another separate arrangement that took shape that year, an informal and, for decades, secret understanding. Revealed by a Bloomberg investigation in 2016, this was a classic case of petrodollar recycling. The U.S. would provide military aid and hardware to the Saudi kingdom. In return, Saudi Arabia would invest a huge chunk of its oil money back into the United States by buying U.S. Treasury bonds. This is a critical distinction. The agreement wasn't about how Saudi Arabia priced its oil. It was about what they did with the dollars after they got them. It was an investment strategy, not a currency mandate. The U.S. needed to fund its deficits, and the Saudis needed a safe, massive place to park their billions. It was a deal of mutual convenience, not a 50-year golden straitjacket. The myth simply mashes these two separate events, a public economic commission and a secret financial arrangement, into one sensational and totally fictional treaty. So, if there was no 50-year pact, why did the dollar become king of the global economy? What are the real pillars holding up this empire? The answers are less conspiratorial but way more powerful. First, and maybe the most important reason, is just historical inertia. The dollar was already the world's main reserve currency long before the 1973 oil crisis. The Bretton Woods system had made it the anchor of the global economy for 25 years. Global trade and finance were already built on dollar infrastructure. When the gold standard died, the dollar was still the currency everyone had, everyone trusted, and everyone used. For OPEC nations, pricing oil in dollars wasn't some grand concession. It was just the path of least resistance. It was the world's default setting. The second pillar is the network effect. A currency is like a social network. Its value grows as more people use it. Because everyone was already using dollars, it just made sense for everyone to keep using dollars, creating a powerful self-reinforcing loop. To this day, the United States has the deepest and most liquid financial markets in the world. If you're a country with billions to invest, the U.S. Treasury market is pretty much the only pool deep enough to handle that kind of cash safely and efficiently. There's simply no other market on earth that can absorb that much capital. The third pillar is the very real process of petrodollar recycling, but understood correctly. It wasn't a secret treaty. It was a logical loop of self-interest. Think about it. The U.S. buys oil from Saudi Arabia with dollars. Saudi Arabia, now holding mountains of cash, needs a safe, interest-bearing place to put it. The biggest and safest option? U.S. Treasury bonds. So, they lend those dollars right back to the U.S. government. It's a win-win. Saudi Arabia gets a return on its money and the implied security of the world's superpower. The U.S. gets its dollars back, which helps fund its budget and keep interest rates low. It was a partnership, not a prison. And the final pillar? A lack of any real alternative. For decades, no other currency could seriously challenge the dollar. The euro is number 2, but the eurozone has fragmented bond markets, not a single unified one. The Japanese yen has struggled with economic stagnation. And while many people point to the Chinese yuan, China has strict capital controls, meaning you can't move money in and out freely. Its financial markets just don't have the transparency or trust that global investors demand for a true reserve currency. These 4 pillars, inertia, the network effect, a logical recycling loop, and no good alternatives, are the true foundation of American economic power. It wasn't built on a fragile 50-year lie, but on a vast and complex system of interlocking interests. Look, understanding this system is key to navigating the massive economic shifts happening right now. We go beyond the clickbait headlines to give you the real story backed by deep research. If that's what you're here for, take a second to subscribe and hit the notification bell. We break down the economic stories shaping your world every week, and your support is what allows us to keep digging. If the 50-year petrodollar deal is a total myth, why did its supposed expiration become such a huge story right now? Why did this lie feel so true to so many people in 2024? Because the best lies always contain a kernel of truth. And the truth is, the world is changing, and the absolute dominance of the US dollar is slowly starting to erode. The myth of a single deal collapsing provides a simple, dramatic plot twist for a much slower, more complex process that's already underway: de-dollarization. One of the biggest drivers of this shift has been the geopolitical weaponization of the dollar. For years, the U.S. has used its control over the financial system to impose sanctions. But freezing Russia's central bank reserves after the invasion of Ukraine was a turning point. It sent a clear message to the world: if you get on the wrong side of the U.S., your dollar assets are not safe. This has pushed countries, especially those who don't always see eye to eye with Washington, to actively look for ways to depend less on the dollar. Then there's the rise of China. China is now the world's largest trading nation and the top trading partner for many countries, including Saudi Arabia. It's only natural that China wants to do more of that business in its own currency, the yuan. We're already seeing this happen. China has launched oil futures contracts priced in yuan, and it's pushing its partners to bypass the dollar. For a country like Saudi Arabia, the logic of pleasing your biggest customer is hard to ignore. This is all happening as the BRICS Plus bloc expands. This group of nations, Brazil, Russia, India, China, and South Africa, now with new members, is explicitly working to use local currencies for trade among themselves. As the group grows, its collective economic weight creates a more viable ecosystem for non-dollar deals, chipping away at the dollar's network effect. And finally, there's Saudi Arabia's own transformation. Under its Vision 2030 plan, the kingdom is making a monumental push to diversify its economy away from oil, pouring billions into tourism, tech, and logistics. So while the technical expiration of that 1974 cooperation agreement is a minor event, it's symbolically huge. It signals that Saudi Arabia no longer sees itself as just an oil producer under the U.S. security umbrella. It's becoming a middle power charting its own course in a multipolar world, a world where its ties to Beijing are becoming just as vital as its old ties to Washington. These genuine shifts are the real story. They're what give the lie its power. The world isn't ditching the dollar because some old contract expired. It's doing so because the strategic math that underpinned the dollar's dominance for decades is slowly, but surely, changing. So let's be clear. The 50-year petrodollar pact is a myth. Its expiration on June 9, 2024 didn't happen, because the deal itself never existed in the first place. America's financial superpower status wasn't built on one secret handshake. It was built on the dollar's existing dominance after World War II, the unmatched depth of U.S. financial markets, and a logical, informal loop of recycling petrodollars that served everyone's interests. The viral story is powerful not because it's true, but because it feels true. It gives a simple name and a date to a real but much slower and more complicated global transformation. The dollar's reign isn't going to end with a bang, triggered by an expired contract. There will be no petrodollar apocalypse. Instead, we're witnessing a gradual erosion, a structural shift toward a more multipolar financial world that's been decades in the making. The 50-year lie is dead, but the real, quiet, and undeniable shift away from total dollar dependence has only just begun.